Well, hello, ladies and gentlemen. Michael Silva here. You're watching the Stock Market Brief Show, where we navigate the financial markets through the lens of technical and intermarket analysis. In today's episode, it's going to be a shortened brief, but it's going to be important because we're going to be talking about some very specific key levels that I believe that the S&P 500 will gravitate towards. Yesterday's video, we talked about the risks that we're building. Today, we're going to kind of follow through a little bit on that, but then map out some of these key levels. So we're not going to waste any time. We're going to get right into it today after you hit the thumbs up button. I'll wait. 3, 2, okay, thank you. Okay, now, first off, I want to start off with this article by Nick Timiraos. Nick Timiraos is the insider over there at the Federal Reserve. No, he's just a journalist over there for the Wall Street Journal. And he had mentioned at the beginning of the article that more Federal Reserve officials signaled that there is a concern at their meeting that last month with cutting interest rates too soon. And the Fed fund futures, if you look out to December, this line be going down. So this means the possibility of less rate cuts, which is currently going into 2024 December. We're looking at 1, 2, 3, 4 rate cuts, with the June kind of at a coin toss as it stands right now. We also had a not so good 12-year bond auction today. And when that came off, I'm just looking at TLT for the proxy here, but we saw a big hit to bonds, which meant we saw a nice rise today with the 10-year yield. I'm looking at TNX here for that proxy. So this is standing a pretty defensive posture, and you would think that, a rise in 10-year yields can affect growth stocks. But remember, we had Nvidia earnings, which we'll dive into. But when the 10-year yield goes up, that's actually positive for a couple different assets. We've noticed that there's a strong correlation between 10-year yield and oil. Oil was up on the day-to-day, kind of consolidating here sideways, really debating, hey, are we going to eventually break out and go further, which could bring things like energy names, which has broken out of its consolidation and had some follow through today. It was the number one performing sector in today's brief. But what's a concern here is energy, or oil, has a huge impact when price goes higher on inflation. And well, the Fed is trying to fight inflation. If you look at the United States inflation rates, this one does include food and energy, which are more volatile names. We had a consensus of 2.9, but yet we had the actual print at 3.1, and it's down from the prior month, but it's kind of going sideways, flattening out here. So people are wondering if energy starts going up or oil prices start to go, if we might see an uptick here in this inflation rate. And then if you look at the core inflation, which excludes that, their goal for the Fed is 2%, and yet we're still coming in above consensus at 3.9, and we're kind of flatlining roughly right around that 4% marker. The 11 sectors that make up the S&P 500 were basically green on the day, other than technology, as we kind of led into Nvidia earnings. Boy, that changed after the bell. And then overall, the markets kind of remained flat on the close. Now, going into tomorrow, we do have some more Fed talk. We have a 30-year tips auction there at 10 a.m. or 10 a.m. Pacific Standard Time. We get some other PMI numbers, so PMI flashes, boom, boom, boom. Those are going to be about 15 minutes after the bell opens up. We get some existing orders, and these may have an impact on the tape. So just have them on on alerts or on your calendar or whatever, just to be aware of if you're trading intraday. And then obviously some more Fed speak there too as well. So Nvidia did report earnings. They're pricing in roughly a $68 to $70 expected move. We came up to that pretty much perfectly, and now we're kind of just floating around in that level. So the market did what the market anticipated. That's why it's so important to pay attention to these expected moves. Doesn't mean that we can't break through it and go higher, but the market priced it in. It's an averaging formula, and well, if you utilize that as a data set, right, and how you can mitigate risk or manage risk, it may very well help you moving forward. So Nvidia saw this big move, and that alone is bringing us back to and around the all-time high for Nvidia after this little pullback. Now we're roughly right around in this area. So we'll see where we finish the day tomorrow, right, or even where we open up. There's probably going to be a lot of eyes, obviously, on this, as there was for a long time. CNBC even had a countdown timer, which is weird to say the least. Now, after market session with S&P 500, if we look at S&P 500 from Awanda, these are the CFD, which allows me to see continuity here. You can see we are back above that 5,000 level. The 5,000 has been a very, very important level from a gamma standpoint, where you can see it's, was pinned all throughout here. So the question here is, after Nvidia earnings, right, and make no mistake, look at the impact that Nvidia has on the market and various other equities. This is a large market cap name, huge implied volatility. It's probably the most dangerous name in the market, especially if you start to look for if it starts to sell off, what that can potentially do. But as it stands right now, it's up in the aftermarket session. So if we get continued momentum to the upside, traders are very focused in on that 5,100. That right there, my friends, is the call wall And you gotta wonder, are people going to chase this market up based off of these option levels, right? This is the largest call wall right here. You can see right over here at about 50.50. Well, we're not too far off that one as well, right over here with about 83 million. So it can act as a potential area of resistance. But if we keep on pressing up higher, that would be the level to really key in on. Now, as far as the downside risk goes, we have that CTA sell trigger. It's still there around 48.60. Think of this more of a zone. So if we start getting below this, it could be potentially more bearish where the momentum all of a sudden changes. Once again, we cross back above the gamma flip line. That means we're in positive gamma. So that's, how are they going to hedge with this? They're going to look to sell into the rips, buy into the dips, sell into the rips, buy into the dips. That is a positive sign. So up, and away for the bulls as it stands currently right now. If we look at the S&P 500, or the SPY, I should say, this is the ETF as it stands right now. We close below the 5-day moving average, but with Nvidia reporting after the bell, we've already we're roughly at just above 500. So we'll see where we open. And that's roughly right at around the upper daily expected move already for going into tomorrow. So if we, we're going to be right around here, right? That's where it's at, 501.65. Yeah, 501.65. So roughly we're right, just below it, 50.90. So right around here. Okay, that's where we can potentially open up. If we open up above this, don't rule it out that by Friday we can't tag the upper weekly expected move roughly around 506. We haven't actually tagged the lower. Now, if we get some increased volatility, the lower expected move tomorrow is 492.77, which is roughly right by the lower daily expected move. But if we're going to be back above the 5-day moving average and this starts to move up, we're in positive gamma territory. Those are both checks for the bulls until things change. So getting a lot of chop here, a lot of volatility, and Nvidia has a big impact. If you look at Bookmap on the upside has some contracts over here at about 50.75 on ES. Beneath us, we have an interesting level that started intraday today at 49.12. Now, this level I'm keying in on because it's been here for quite some time. So I'm just pointing this out. The longer that it's here, the more likely it is to eventually fill. Other than that, we have some at 49.50 and 49.37, but they just haven't been there quite as long as that 50.75 level. So pay attention to that level if we can get back above it. Now, as I stated right on the prior video, there are a lot of risks building, but as it stands right now, the market wants what the market wants. Nvidia is continuing to press up higher. So just be aware of what price does if we do reach into that 5,100. If price can actually get to this level, price can very well pin. But if we don't see, more traders start to reach out, and we're already looking at, equity names that have a huge impact on the market coming to all-time highs, if this thing does see some sell-side activity, it could bring down the market where we start to trigger CTAs and so forth. And then we could start to all of a sudden seeing some more significant volatility, but not to the upside, to the downside. So that's what I'm looking at. Make sure to follow me on Twitch if you haven't done so already. And you can follow some of the live streams. That's all I got for you. See you later.